Yeah, and I was ready to take action, right? I wasn't just looking at deals, I was ready to move. And if I found the right deal, I was ready to move. Yeah. And it's kind of like that law of attraction thing, right? That being open to opportunities, right? I was really open to opportunities and to finding a deal. I was I was actually kind of desperate to find a deal. And so then this came along, like you said, I was ready to take action. I was ready to move. Had everything in place as well, right? I'd spoken to property managers. I had spoken to lenders so that when I need, and I had the cash ready to go. So when this deal came, I could move on it, right? Had I not been in that position, I would have lost out, and they would have listed it and someone else would have bought it.
Welcome to Real Estate Deal Closers with Anette, Talie, where we focus on the deals. Our guests are real estate closers who will share in detail the whole process from finding a deal to closing it, as well as strategies and tips to help you do the same. Here's your host, Anette, Talie.
Welcome to another episode of Real Estate Deal Closers. I am your host, Anette, Talie, and my guest today is Barri Griffiths. Welcome, Barri.
Hey Annette, thanks for having me. I'm excited to be on your show. I had you on my show, so I'm excited to be on your show now.
Absolutely. I'm super excited to share with my audience about you. So let me tell you a little bit about Barri. He is the host of YouTube channel Wrestling with Real Estate and the WWRE podcast, where he interviews people from all aspects of the industry. His goal is to help educate as many people to the amazing benefits of real estate. For the past decade, he has been working in the entertainment industry. He previously starred in the UK version of US Gladiators as Gladiator Goliath. Then he went on to wrestle on TV for the WWE as Mason Ryan, where he wrestled the likes of John Cena, performed on pay-per-views on regularly appeared on Monday Night Raw. He is currently performing for Cirque du Soleil at the MGM Grand in Las Vegas. That is amazing. I'm going to have to go to Vegas and go see you.
Yeah, please do. But don't come right now because you won't see anything. So we won't, because we're not performing right now. But yeah, when we start back,
soon.
Yeah, hopefully soon. Absolutely.
So tell me, how did you get into real estate?
So what happened was, as you mentioned, in that I was wrestling for the WWE, and I came over from the UK, and you know, everything was going well with wrestling, and I had this great career, and I didn't have any kind of backup plan, right? I was a wrestler, but I never thought anything about anything else except being a wrestler. My plan A was to be a world heavyweight champion. Plan B was to be the world heavyweight champion. Plan C was to be the world heavyweight champion. I didn't have any other plan. So in 2014, in April of 2014, they didn't renew my contract, and I didn't see it coming at all. So this kind of came out of the blue for me. So one day I'm a wrestler making good money, and then the next I'm not, and I'm living in the US, and you know, I don't have much skills except picking up dumbbells and picking up people, right? You know, it's not like I can pivot and go do something else. I was, you know, firmly in the wrestling world, and that's kind of, you know, pretty much what I could do at that time. But I just bought a house. So I bought a house in January of 2014, and in April of 2014, you know, they didn't renew my contract, and it was an expensive house. So as my dream of wrestling had come to an end, I couldn't see myself selling the house because I loved the house. I didn't want to lose my dream of being a wrestler and sell the house. It was two things, right? It would have been two things at once. So I went down the rabbit hole of trying to find a tenant, understanding how you screen a tenant, how you manage a property, all that stuff. And that opened my eyes to real estate investing, into bigger pockets, I think, and probably eventually rich dad, poor dad. And it opened this whole other world to me of real estate investing. So not only was it creating a plan B that I needed, and it probably was a plan A at the time because I didn't have too much else going on to do that, but also I understood what it could create for you, right? The lifestyle that it could create for yourself, right? That if you own enough rentals and have enough income coming from that, you have that financial freedom, and that, you know, you can live whatever life you want from yourself. So that's kind of how it fit in with me. And once I learned about all that, I was hooked. I was all about real estate from that point on.
Amazing. And you know what? That was kind of the same book that got me interested in real estate, you know, after reading. And I'm like, okay, I love it, but how? You know, like it has all this amazing concept, but it led me to start investigating more because I wanted to learn more.
Yeah, and it just starts you off, right? It's not a how-to in real estate investing. It's more of why you should, right? And not necessarily, it's liabilities versus asset, right? Like that was mind-blowing to me, right? You want something that's making you money rather than something that's costing you money. And I think the brilliance of that book is the simplicity of it, right? It's kind of easy to understand, and it lays it out, and you just understand it. It's a concept that's easy to understand, and it's everyone quotes that book, right? And it's for a reason, right? That book is just life-changing for so many people, and there's a reason for that, of course.
Absolutely.
The Deal.
All right, let's talk about the deal. So tell me, what deal are we talking about, and where is the location?
Yeah, it's a 6-unit deal that I have. I still own. It's in an area called Covington, Kentucky, which is essentially Cincinnati. It's just the other side of the river in Cincinnati, Ohio. So yeah, that's the deal that we're going to be talking about today.
Oh, wow. So next time I go to Ohio, I'm going to pass by it because, I go to Cincinnati to the airport when I go to Dayton.
Oh, you okay? You invest in Dayton?
I have some properties in Dayton.
No way. We never talked. All right, we'll have to talk about that off air. I've got a good friend who invests in Dayton. I'm kind of interested in the Dayton market. Actually, is an interesting one. Okay. But yeah, anytime you want to go by pass my property checkup, make sure the contractors are doing what they're supposed to be, making sure the tenants are behaving. I'll send
I'll send you the
checklist. Perfect.
All right. So what type of asset is it? The A, B, or C class?
When I bought it, I would say it was a C, maybe a C minus, but I think the area is a B, maybe B plus even, so that's kind of tells you a little bit of story about the property itself. So yeah, it's a C minus in a B plus area, I'd say.
That is a great find.
Yeah, so, you don't want a B property in a C area, right? You want to see it.
You don't. All right, so how did you find it?
So how I found it was through a broker, but it was a little bit, wasn't as simple as that. So created a relationship with a broker. I live in Las Vegas, so it took me a while to create a good relationship with a broker. And as probably your listeners have heard a lot of times, broker relationships are key, right? They're the people finding the deals. You have direct mailing and you have wholesalers and you have other ways to find it, but brokers are really key. So I really focused in on creating a good relationship with a broker at Macca's Millichap in Cincinnati. His name is JD Smurge, in case he's listening by any chance. He's a great guy. And, we created a personal relationship with him, right? Initially it was business, and then I transferred that to personal. So over the space of a year, I created that relationship with him, and we'd looked at deals. We got under contract one, had to pull out. So he knew I was serious, and, got to that point. So what happened was he called me one day and was like, hey, I've got a 6-unit that might interest you. And I was like, I don't, 6 units is a little small. I was looking at 15 to 20 units. That's kind of what I wanted to buy, and he's like, yeah, but this is a great deal. It's in a great area. It's rents are really, really low. Now it needs a lot of work and it's a little rough, but that's where the opportunity is. Some people have looked at it, and the opportunity is as well, similar to what you mentioned on my show, one of your 6-unit, it was going to be listed on the residential side. Now it was still off market at this point, but he was like, they're literally going to list it tomorrow. And it was his sister-in-law that told him about it. So his sister-in-law is a residential agent. So there's a little bit of good fortune involved in that. Mm-hmm. But so they were getting ready to list it the next day. And he was like, listen, I've got some pictures. I know this is the story, blah, blah, blah. And I know also that they're selling it for $300,000. Someone's getting ready to list a 6-unit in not quite as nice an area for $500,000 just down the road. And it wasn't in quite as nice an area. So we knew just by that quick, didn't look at the P&L, didn't look at the T12, didn't look at the rent roll, didn't put the numbers in a spreadsheet. It just knew from those kind of numbers that it made sense. So after speaking with him, it's like, all right, what do we come out? He said, if I was you, we need to come in at list price. So I offered $300,000 list price. And yeah, I made an offer that day from when he called me. So there was some luck involved, right? And I always say this, that luck is where opportunity meets hard work, right? I was working hard on that broken relationship, created that broken relationship. So he was one of the first person that he thought of when this deal came up. So yeah, that's how.
And that's so important, but also not only hard work, but you were prepared. Right? Mm-hmm. Like luck worked because you were ready to do it. Because if you didn't work hard and were not prepared, then you would have missed it. They were listing it the next day.
Yeah, and yeah, I was ready to take action, right? I wasn't just looking at deals. I was ready to move. And if I found the right deal, I was ready to move. Yeah. And it's kind of like that law of attraction thing, right? That being open to opportunities, right? I was really open to opportunities and to finding a deal. I was I was actually kind of desperate to find a deal. And so then this came along, like you said, I was ready to take action. I was ready to move. Had everything in place as well, right? I've spoken to property managers. I had spoken to lenders so that when and I had the cash ready to go. So when this deal came, I could move on it, right? Had I not been in that position, I would have lost out, and they would have listed it and someone else would have bought it.
Absolutely, absolutely. All right. So you bought it basically at listing price. So how did you pay for it, or did you finance it? Tell me about the financing of it.
Yeah, so I used commercial financing for it, right? So there was a few good things. Was that it was a low purchase price, so it was 300,000. So they were going to give me 20% of that, so I needed to come with 60,000 as the down payment, right? So it wasn't a huge amount, which I had at the time. So with the financing though, it was a little bit tricky because I was out of state. So I lived in Las Vegas, didn't have any property there, didn't have any family there. So most banks, to have a comfort with you, they need you to have some kind of footprint there. They need you to own property or to live there, because obviously it makes sense as your first property, right? If you're out of state, that's very risky, right? All lenders, the main concern is, are you going to pay, and are you going to pay their money back, right? So that's their main concern. So if you're out of state, you're not able to check on the property regularly, you may not understand the market the same, you may not have the same experience. So they really want you to have that. Well, what I was able to do is I was able to go with US Bank, and US Bank have a bank here in Las Vegas. Oh. So by having a bank here in Las Vegas, I was able to count that as having a footprint in Cincinnati. And what I also did, I opened an account with them. I put some money in the account. So that also helped as well. That made me a stronger borrower. So yeah, so I got at the time I got a pretty good loan. So it was a 5-year term that just goes to an adjustable. So it's not actually a balloon. It just goes to an adjustable rate after 5 years. Now, of course, I can refinance or do whatever I want at that point, but it just goes to an adjustable rate. So it's not a balloon essentially that I have to pay everything off. And I got an 80% loan to value. So I only had to put 20% down. And at the time I got an interest rate of 4.4, which was January of 2020, which wasn't actually a bad rate at all. It was quite competitive. Now, obviously rates have dropped a lot since then. I wouldn't be very happy with it right now, but at the time it was a 4.4. And the good thing about that one was as well is it didn't have a prepayment penalty. So I had the option of doing a 4.1 with a prepayment penalty, or a 4.4 with no prepayment penalty. I was like, let me think about that for about half a second. And then I said, yeah, of course, give me the 4.4 with no prepayment penalty. Because also I understood that aligned better with what my business plan was for this property.
Right. Okay. So, you said that the listing price was 300 and then you offer that. But, tell me about the inspections. Were you able to negotiate anything after the inspections?
No, because the property was a mess and there was a lot of value there. So it's only 6 units, right? So, even if I figured out 100,000 for renovations, I still have, $100,000 in equity, right? And rents were really low there. Average rent was, I think, around 600. So it's 2 1-bedrooms and 4 2-bedrooms. So average rent was about 600, but the average market rent was about 1,100.
Oh, wow.
Yeah.
So, and that's very important for people to recognize that, like, when you have a good deal, like, you just gotta go with it. Like, even if you find stuff that you didn't like, you were still getting more than 1% at when you got it. So why even try, right? Like, you were getting an amazing deal.
Exactly, and it was baked into the seller was just looking for 300,000 just to get out of the deal, and that was it. He was a slumlord, no doubt about it. He took horrible care of the property, but he was just looking for 300,000, get out the deal and take that money. And he probably didn't owe anything on that. He'd owned it a long time, so he was just looking for that. So I didn't want to. The deal was good enough that I didn't need to renegotiate anything, right? And I did inspection, right? Had the roof been messed up, right? Needed a brand new roof, which would have been 20,000. Okay, that might have changed things a little bit, right? And I did, the inspection didn't show up anything too crazy, right? There wasn't anything that surprised me, right? Obviously, all the units needed a lot of work. There was a ton of deferred maintenance on the outside. You know, there was some bits and bobs that needed to be done on the outside, but it wasn't nothing crazy. Now, like I said, had I needed to put in brand new furnaces, brand new HVAC systems, brand new water heaters, right? All that, the expensive capex items, brand new roof, that would have changed, but nothing major like that needed to be done.
Awesome. All right. So what's your exit strategy for this project?
So the business plan was with this one was from the start, was, like I said, it was a 6 unit, so it was much smaller than what I was looking, but I knew there was equity in there. So the goal was to renovate all the units, push that higher rent, you know, create that value with the NOI, and then sell. So create that value. You know, I was thinking 500,000, to be honest with you, at the time, and take that equity and roll it into it, do a 1031 and buy something, you know, much bigger at that time. Well, the good news is, since then, I was predicting 1,000 for the 2 beds and 800 for the 1 beds. Well, I'm getting about on one bed. I'm getting 1,400 on the 2 beds. I'm getting 1,250 on one of the other 2 beds, and I'm getting 1,150 on one of the other 2 beds. So much higher than what I was expecting. So that's the good news. So it's really actually pushed the value closer to 625, 650. So there's a lot more equity. So yeah, so I've got 1 more unit that I need to renovate. I've got 1 unit that I'm trying to lease up now, and then 1 last unit that I need to renovate and then turn around the rent, and then I'll be able to hopefully sell and do a 1031 into something, you know, much bigger, you know.
Amazing. And you know, how much was your budget for renovations?
So 100,000 is what I budgeted, what I assumed. Now, a lesson I learned with that, what I would have done next time is I would have maybe, so like I said, I had a good loan from US Bank, but I would have looked and I'm sure I could have found one that did a loan to cost. So they just did a straight up loan, just a conventional commercial loan where they did 80% of the value. Now I would have tried to find something that did loan to cost. So for people who don't know, essentially they roll in the renovation budget, right? Not all of it. It's usually about 75% of the purchase price and 75% of the renovation budget. But that would have been so much less capital outlay that I would have had to take, and I would have been able to leverage it a lot more. Now it's okay. I'm gonna be able to, you know, take advantage of all that money that I put in. But the only thing is now that money is tied to that property and it's tied to that 1031. Whereas if I'd used a loan to cost, I would have used a lot less of my capital. I could have used that on other projects. That capital has to be used on my next project now that I'll 1031 into.
Right, but this is like a great lesson, right? Like I also bought my first one cash, and then I was like, why am I not, like, now I'm thinking about it, I'm like, I should have bought 4, you know, 4 of them,
Yeah.
25% down.
Yeah.
So,
Yeah, it depends. And it depends where you are in your investing career, what you're looking at. Some people, they're scared to death of leverage, right? And that's because of certain experiences or what they've been taught. And that's fine, right? It's whatever you feel comfortable on, whatever your goals are, right? And, you know, maybe as you get closer to that number, you want to have lower leverage, right? I'm more in the wealth creation mode right now. So I'm okay with leverage done right? I'm not going to over leverage and, you know, barely be meeting my debt service ratio and debt coverage ratio, or, you know, just be struggling to make my debt payments, right? Because I've over leveraged, but at the same time done right and with plenty of room there, I'm looking to leverage as much as I can, essentially. Absolutely.
I think leverage is awesome. You know, like I use it as much as possible, but also, you know, making sure that you are not overdo it, you know?
Yeah, that's important.
Absolutely.
Productivity hack.
All right. So let's talk about your productivity hack. So what have you been doing on your business that has taken you to the next level?
Yeah, for me, a productivity hack that I use a lot is like, you hear people say, right, start with the hardest thing, right? A lot of times, right? Start with that hardest thing. And that's great. But for me, I always have to start with the easiest task. So I find, like, if I'm making a list for the next day, I find the easiest task, the very easy task that I can start with. Because sometimes if I try with the hard things, I'll just procrastinate and I'll put it off. And this comes back to, I think something bigger is understanding who you are as a person and how you work as a person, right? Mentally and emotionally and everything like that, how you work. So I always start with the easiest task. So I'll go from the easiest to the hardest. So if I have 10 tasks, I'll start with the easiest, the next easiest, the next easiest after that. And I find that helps me get that ball rolling to start off with. And I feel good about doing those first tasks, and then I can get to those harder tasks, and that really helps me, I feel like, in terms of a productivity hack. Now, I think as advice for people, I think it's a better advice for people is rather than that is understanding who you are as a person and how you work. And I think that would be my productivity hack to people, is because it's not necessarily a direct productivity hack, but you need to understand how you work. Are you better in the mornings? Are you better in the evenings? Are you are you better like I am, starting with the easiest stuff? A lot of people are better starting with the hardest thing, because once they've got that hardest thing out the way, everything else becomes easier. So it's just understanding yourself as a person, I think, is very, very important.
Absolutely. And sometimes I am driving and I have, that's the time when I try to do phone calls because my time is very limited. Like I just know that I look at my list and I'm like, okay, what can I do while I'm driving to pick up the kids from school, so I can get more stuff done. So you got to understand who you are, like you said, and adjust that to your personality.
For sure. Absolutely.
Expert tips.
All right. So now we are in the part of the show where you're going to share with me 3 expert tips. And Barry is going to share 3 expert tips on mindset.
Yeah, absolutely. I think mindset is so important. I even have a part of my podcast that is dedicated just to mindset, because I think it's so important. And it's become, I figured this out through a lot of self-reflection, right? I mentioned earlier in the podcast that when my contract wasn't renewed with WWE, that was a really hard point in my time, because I had always identified as a wrestler. I'm a wrestler. I'll be a wrestler for the rest of my life. That's who I am, and that's what I've always done. Well, now my wrestling career came to an end, and I had to figure out, well, who am I? I'd been riding this wave of wrestling, moved to the US, making good money, being on TV, doing all this really cool stuff, and was able to just ride that wave and not really worry about it and not have any self-reflection. So when that happened, I had a lot of self-reflection, which led me down the path of mindset and realized how important it is. So the one tip I would want to talk about is self-talk. Is so important. The way we talk to ourselves, we talk to ourselves more than anyone else, like not even close, right? All day long, we talk to ourselves in our brain, and what you say really matters, right? What you say to yourself matters so much. So as an example, right, as framing of a sentence or whatever is so important. So for a while, I needed to stop drinking, because not I had a problem or anything like that, but it just made me sick. Even one drink of alcohol can make me sick. I kept doing it, and would get sick, and and it was just miserable. So in the end, I had to realize I needed to talk to myself differently, because what I would say to people was, and it's what you say to yourself, but it's what you say to other people, because what you're saying to other people is what you're saying to yourself, essentially. And I would say to people, yeah, I don't really drink. I try not to drink. Then, no, I had to say to people, no, I don't drink. I'm not a drinker. And anytime I thought to myself as well, drink, I wouldn't mind just a nice glass of wine or a beer right now, right? I'd always tell myself, no, you could never, ever drink again. You could never, ever drink again. And that, making those changes is huge, right? It's the difference between someone saying, I'm trying to quit smoking, and someone saying, I don't smoke. That's a huge difference, because you identify as that person then, right? I identify as a person now that doesn't drink. As hard as it is, trust me, I grew up in Wales.
When you are saying, like, I'm on a diet, I'm trying not to eat, then people are like, oh, but try a piece. Like, one bite, right? One sip. But when you say, like, I don't eat sweets, or I don't like cake, or I don't like soda, it's like, oh, the conversation ends there. There's no questioning, because you just don't do it.
Exactly, right? It's just a completely different way of looking at things, and the way you kind of speak to yourself. And it's going back to that conversation you have with yourself, right? The way you speak to yourself is so important, right?
And one more thing that you just made me think about, like, once you say, like, I don't drink, like, you cannot start drinking, because people are going to be like, did you say, like, you don't drink? Like, once you verbalize it, like, that's the truth, and you got to stick with it, right?
Yeah, exactly. exactly. And I think, so essentially, I think there's two tips there so I can separate so that people don't get this. One is be careful how you talk to yourself, right? Understand how you talk to, listen to what yourself, because even though we're talking to ourselves, we're not aware of what we're actually saying. Is it negative? Is it productive? Is it true? Like you tell yourself, I'm lazy, I'm lazy, I'm lazy. Well, is that true? Are you actually lazy? So you've got to ask that self. And then also then from that point, so the understanding that self-talk, but then from there, understanding what you say to yourself, right? Changing what you say to yourself. Like, you know, if you're telling yourself, hey, I'm successful, hey, I'm hardworking, that then also manifests itself inside of yourself then as well. It really does like build on you, and like it creates a different person, I think. It really, really does, right? I don't know what you think, but I really noticed the difference. And trust me, I have to this day, I have to be careful about it, right? It's easy to get into that negative self-talk, but at least now I'm able to catch it. Whereas before I didn't notice that I was even doing it, but now I'm aware. I'll be like, okay, stop that, think positive, do something else, right?
Absolutely. Absolutely.
And then another mindset hack. I should have thought about this a little bit more. Is, but I think a mindset hack that I've realized recently as well is having clarity. Clarity is so important in part as your mindset, right? Like it's easy to get, and it's clarity in everything, right? What do you want from life, right? In real estate, I can definitely niche it down, but in life in general, right? And like, what do you want for yourself? Do you want to be married? Do you want to be single? Do you want kids? Like, what does that look like? What do you want your life to look like? And having that clarity to understand that, right? It really makes you focus and understand what you're looking for. So you're able to see opportunities, able to see what you want to do, right? It's like having a roadmap to your life. And then if we drill down on real estate, having clarity on what you understand is so important in real estate, I think, because the shiny object syndrome, it can get so bad in real estate, because everything, like you listen to tons of different podcasts, mine included, and I interview people from all different aspects of real estate, right? You'll have someone doing tax liens, someone who's wholesaling, someone who's doing single family buy and holds, someone that's doing multifamily buy and holds, someone that's doing syndication. There's so many different things out there that can catch your attention. So you want to have that clarity and that focus on what you're doing. Really, it's so important. So, you know, like you are, right? You're focused on multifamily syndication, right? Me too. You focused on that. So when opportunities come, that's not that, you can say, no, I'm not interested. And because also we have only a limited amount of time, it's so important because your time can go, a day can go like that, right? You can lose a day in a blink of an eye. So it's really important to have that clarity in your life and in real estate in terms of what you're looking for.
Absolutely. I love that. I love that because once you set your goal, I want this, and you are clear about it, you're going to start going towards it. Like, you know, even if you don't think about it, you're going to start doing stuff that is going to take you closer to it.
Yeah, 100%. 100%.
All right, Barri. It has been a pleasure to have you on the show. Tell my audience, where can they find you?
Yeah, the best place to go find out more about me is wrestlingwithrealestate.com. I have a podcast called the WWRE podcast, a YouTube channel called Wrestling with Real Estate, and I'm on Instagram as Barri WWRE, but that can get a little confusing. So if you go to wrestlingwithrealestate.com, everything is there. The socials, the podcast, the YouTube, everything is there. And if anyone's interested in talking more about real estate, and hopefully everyone got this through this podcast, is I love real estate. I'm obsessed with real estate. I can talk about it all day long. So if anyone's interested in just having a conversation about real estate, there's a sign-up page on wrestlingwithrealestate.com where you can schedule a call and we can just hop on a call and just have a fun conversation about real estate. So that's there as well if anyone's interested.
Amazing. Thank you so much. And don't forget to like, share, and subscribe to both our channels in YouTube. Thank you, guys.
This was Real Estate Deal Closers with Anette Talie, brought to you by Talie Investments. We hope that you enjoyed this episode. Our goal is to provide amazing value on your real estate journey. Connect online at www.talieinvestments.com, where you can find this episode and more. Did you like this episode? Subscribe, like, and share.